silver, based on this chart pattern, run to about $68, $69 an ounce. It could happen literally within 2 or 3 trading sessions based on this chart pattern. So where this next run is going to go, which is about 51.75 for gold. If we to see what that is, it's about a 22% move. So there's a lot of potential still for gold to the upside over the next couple of months.
Now the question then is, okay, well, how high could gold go? These two trend lines coexist here all the way up around this 66 to 6,750 level. Silver, guys, I gave you the top on silver the other day. I said watch for this upper trend line to hit. It hit it. It even pierced it. I think in the near term, and I stress near term here, okay, because I still think silver can go much higher over the next couple years. But in the next few weeks, I think silver has topped here, and I think we're going to pull back to about $54 per ounce on silver.
The charts are screaming, and the message is clear. Gold is showing a classic bull flag pattern, hinting that a break to the upside is imminent over the next few weeks. Silver is screaming higher right now. Fresh bull flag breakout, targeting $64 to $69 fast, potentially in days. But don't count out a short-term pullback. Technical analysis shows a critical point where this rally could fail, sending prices lower before the long-term bull run continues. Meanwhile, silver has likely hit a near-term top with a pullback to the $54 level expected. Today, Chief Market Strategist Gareth Soloway cuts through the noise with pure technical analysis to reveal the truth about the precious metals. He breaks down the gold wedge pattern and subsequent bull flag, offering short-term targets and the key level where the bullish pattern fails. For the long term, he uses a logarithmic chart to project gold's ultimate high, which could be up to $7,500. Are these short-term dips a trap or your final golden buying opportunity? Let's watch clips from Gareth Soloway's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Gold and silver bull flagging, upside imminent. We're going to take a look at the charts, pure charts, no BS. What's the data saying? Let's get started. So first off, this is your gold daily chart. Now, the reason why I'm starting like this is because number one, this gives us our short-term moves, meaning over the next few weeks, what's the likely move in gold? So what we see here very clearly is this little bull flag forming here, right? And what we know, if you followed my previous videos, is we've been analyzing this wedge pattern right here, right? And so essentially what we had was we had a breakout of the wedge pattern, okay? So again, you had the big bull move up, then solid pullback, smaller bounce, smaller pullback, and that's what forms a wedge, right? So if we look at the technicals of a pattern formation, here's a wedge, and price starts out wide and gets tighter and tighter and tighter until it breaks out. And what you've done here is you broke out and confirmed, confirmation being exceptionally key, and we're now making this pattern, which in technical analysis is a bull flag. Now, can bull flags fail? Yes. We broke out here. We confirmed the breakout on this candle. We then went into sideways consolidation. Now, again, what does that tell us? It tells us the most likely outcome is that price is going to eventually break higher. Where will be the first resistance if price breaks higher? That's pretty obvious. It's going to be double top. All right. So again, what we've looked at now is the most likely outcome in the next few days or weeks of gold. All right. Now, just because it's the most likely outcome, we just can't ignore the potential. Let's say it fails, because remember, even at 75% chance, there's still a 25% chance that it fails. How do we know when it fails? Very simple. If price breaks and confirms below the wedge, which it broke out of, so if we close, let's say, below 41.15 and confirm below that, now you have a failed bull flag. Again, the result of that would most likely be a move down towards this 3,900 low. Now, overall, you guys know my mid to long-term projections on gold remain robustly positive. Even if we were to fail this wedge pattern, it's only a short-term pullback, right? If you look at both sides, you kind of have an idea of, well, what's my worst case scenario? Well, number one would be here, right? If you don't stop out here on a break, number one's right here. If that breaks, my absolute worst case, right? My absolute worst case would be a move down to about 3,500 and change, right? The former major bull run high, this area becomes major support, and you'd look at that as technical support on the chart. All right. Now, even if it did pull back there, I would be buying quite a bit. I mean, this is my golden level, literally using the word golden on purpose, because it would be such, in my opinion, a good buying opportunity. Now, the question then is, okay, well, how high could gold go? And to do that, what we want to do here is we're going to flip over to our logarithmic chart and take a look at this, right? And so one of the things that I've noticed here is that we have some trend lines to monitor. And we take this low on the log chart and we bring it up here, okay? And so what we're doing here is we're just formulating potential major lines in the sand on gold. So we're taking the low just before the big bull move. So this was the low in 1976, and then we had the big bull move, right? Then what we want to do is we also want to take the low here, and there's really a trend line right through here, right? Do you guys see that? How I'm using two trend lines? So I'm using the lows of the bear markets in gold. All right. So again, notice what we're doing here. We're taking essentially here, let me get the right arrow out. We're taking this low here, which then flips over to be this high. So we're using the major low to the major high right here. And then the second trend line, we're essentially taking all of these lows along here, right? I mean, all of these hits all through here. And we're seeing that these two trend lines coexist here all the way up around this 66 to 675 level. This one makes a lot of sense. And again, part of trading and technical analysis is that you're looking for lines that you're connecting major lows and major highs. And what we're noticing is that those two lines generally come together right up here. And what that tells me is if we were to have a big rally up, that would likely be a major sticking point. Now, when could we hit that? I mean, that's a tough decision to try to figure out. I would generally say at least going to 5,000 in 2026, and then maybe 2027, 2028, somewhere in that vicinity, we could easily get up to this 7,000 level, which, by the way, at this point, I mean, that's another 70% move or so, I believe, to the upside. We can do a measurement here and see, yeah, about 70% to that upper trend line right there. So you're looking at 60 to 70% more upside in gold just over the next couple of years. Now, again, is there anything that says this absolutely has to happen in the chart of gold? No. It's just a logical, unbiased, like listen, you're going to hear a lot of people out there, guys, and I'm sure you've heard, and listen, we all want to believe it, right? I hold long-term holdings in gold. So, of course, do I love hearing people saying, oh, $10,000 by 2026? I mean, yeah, I love the idea of that, but is that based on reality and science and analysis, technical analysis? No, it's hopes and dreams. Silver, guys, I gave you the top on silver the other day. I said, watch for this upper trend line to hit. It hit it. It even pierced it. I think in the near term, and I stress near term here, okay, because I still think silver can go much higher over the next couple years. But in the next few weeks, I think silver has top tier, and I think we're going to pull back to about $54 per ounce on silver. All I'm doing is simply using the fact that look at the last time we hit this, we had a sizable correction on silver. It went from here all the way down. It basically dropped 16%. Just out of curiosity, if we drop there again, that would be about a 14 to 15% drop on silver. It would actually take us below my target. My target, honestly, is really just back here to our former pivot point right there. You can see, again, this would be a retrace to the scene of the crime at 54. So you have major pivot high right here and major pivot high. We broke out. What would be a retrace to the scene of the crime right here? And then we could start to head back up. And that would be my best guesstimate based on the technical analysis of the chart. Again, we'll see what happens. We might even get a daily topping tail today. Obviously, we'll have to see what the Fed does.
ChrisVermeulen, a seasoned technical analyst, discusses why precious metals are set for a big move. He highlights silver's high momentum bull flag and its upside targets, while noting gold's more stable, less volatile characteristics. With all time frames bullish and gold having already blown past long-term targets, the question is, will money rotating out of the stock market be the catalyst that sends gold and silver sharply higher? Now let's watch some clips from his interview.
Yeah, well, silver's got a beautiful chart. As you and I know, we're in a time where I think silver, precious metals across the board are set to continue to push higher and potentially go really ballistic and take off over the next couple of months. But when we look at the short-term chart of silver, we've had a lot of different stuff, different patterns on different time frames unfold. But we just had this great big pause. We had a big rally up to this level, which, depending on where you want to draw this level, either way, it's a beautiful big pause, a consolidation, meaning that this is just a little bit of a temporary pause before it goes higher. And now we've seen it break out. We've seen it run higher. And now it's forming another bull flag pattern right here. We've had an explosive move up over the past 2 weeks. It's been trading sideways. This looks like a high momentum move, meaning we could see silver, based on this chart pattern, run to about $68, $69 an ounce. It could happen literally within 2 or 3 trading sessions based on this chart pattern. So we could see silver and metals have a big pop this week. So it's pretty exciting when we look at the chart, and using technicals. If we use Fibonacci extension, it gives us a good idea of just the this short-term rally and this pullback that we've seen. It tells us where the next 2 upside targets are for silver. So $64 is the next upside target. Based on where price is right now, it's about a 10% move. And if we do have this 100% measured move, that's going to be around a 17, 18% move to the upside. So this could be a really nice explosive move in silver if it can get its momentum going over the next couple of trading sessions. And when we look at, I don't have it for silver, but silver and gold are pretty much the same. When we look at the seasonality chart, as you like to always pull up here, Craig, we're coming into that time of year, like pretty much right now, after the first week and a half or, of the year or of December, we tend to see precious metals want to go higher. And usually gold and silver move up together. And so we're coming into the sweet spot, not only for precious metals, but even for equities to have a final push higher. And so silver is really exciting because percentage wise, it's got a very big move, primed and ready. And as we can see from this last portion of this move, in more or less, it was 5 trading sessions, it kind of made, a very significant move percentage wise. If we look at that move, it was about 24%. So I think there's some excitement just around the corner to end the year on a very strong precious metal note. Yeah, if we use Fibonacci retracement, we could say, well, based on that move, the sweet spot will be between about 52.50 up to about 55.40. So right around this breakout zone that you just mentioned, right where this pink reddish line is. So that would be a healthy pullback range. The chart pattern right now is actually primed and ready to pop and really take off. This is a very high momentum move. So if it does pull back, I think it's an opportunity. If you're not long it right now, I think, I do think it's going to move up here. So either way, all the time frames for silver and precious metals are bullish on all time frames to the upside. So at this point, it's in a very strong rally mode. You need to own it. I think gold's. I think right now we're seeing the precious metal space has really come to life. Everybody's kind of on high alert for it. So naturally, we're going to see money move into the more speculative side of things, which is why I think we've seen silver move first. People have moved into it quicker. It's a smaller market. They want to make higher returns. So silver's already popped and broken out. Gold is a little bit more conservative. It still has a very strong chart pattern. This is a huge run up. It's at a big pause. It is pointing to about $5,200 per ounce when all this unfolds. And right now, if we zoom in on the shorter term chart, we've got a very strong bull flag pattern, just very similar to silver. It's had a nice run up. It's had a pullback, and it's just showing that in the short term, while silver shows about a 17% move, gold shows roughly about a 6 or so percent move. And that's typical. Silver percentage wise moves a lot more when it has a run. So I think gold is a little bit slower moving. I find it's more accurate. I find I can win more trades with gold. And see, there's always a trade-off, right? Either you can knock some out of the park, have some huge gains, but you might not win many trades because they're a little more unpredictable, like silver, or you make lower returns, but you win more trades and it's less volatile. So there's two different characteristics between these opportunities. And gold's doing what it does. It's being a little more conservative. It's lagging a little bit at this point. I think money's looking for higher returns than gold, which is silver, and I think miners and platinum and palladium. I think there's money starting to figure out, trying to spread out, I think, in the precious metal space right now.
And take a look at the annual charts, where you can really see the longer term trends. We go from the hourly charts, the daily charts, the weekly charts, the monthly charts, the quarterly charts. But how about an annual chart, my friend? What do you got?
Yeah, I don't know if you and I have looked at these yet.
Goodness.
But obviously, we've got a pretty explosive bar. We've never seen a bar. I mean, it'd be interesting to go back here. If we look at these green bars, percentage-wise, there was a 149% bar. We'll have to see what some of these other bars are. That was a 30%. So this bar that we have right now, I mean, if you think about it, it still has a lot of potential to be back similar to the late 70s, where we've seen bigger spikes than what we have right now. But when you look at it from this chart standpoint, it's a pretty big spike. Let's take a look at the log chart. If we kind of look at the log, it gives us a bit more of a balanced view. But I mean, we're just in this big rally mode in precious metals. There's no doubt. The trend is up. I don't think anybody's really trying to pick a top in gold, because that's just a bad opportunity or a bad play. If we go back to the daily chart, this is where we can get an idea of where the next critical targets are, because the yearly chart, we've already blown past all that. So we could grab the low from this last bull flag pattern, the high that we've had, and this recent low, and this will give us an idea of where this next run is going to go, which is about 51.75 for gold. If we to see what that is, it's about a 22% move. So there's a lot of potential still for gold to the upside over the next couple of months. We could potentially see money rotate into this space. I think one of the big things that'll be interesting to see play out is if the stock market eventually stalls out and rolls over. And if it does, is the money that's coming out of equities, is that going to pile into precious metals and send them sharply higher? I think it will. It's just a matter of waiting for the stock market to actually roll over and start to sell off, and for that new money to be raised to get put to work somewhere. And typically money, when there's cash on hand, people look to whatever's performing best to move into. And I think precious metals are definitely that space.
Two of the sharpest chart minds in the game, Gareth Soloway and ChrisVermeulen, are now aligned on one explosive truth: the precious metals bull is just shifting into high gear, while Gareth maps the multi-year runway to 6,500 to 7,500 gold. Chris sees the rocket fuel already lit for a blistering near-term sprint. Short-term dips are buyable gifts, long-term upside is generational, and the clock is ticking before the masses pile in. Load the boat before the final parabolic leg leaves the station, because when this train really moves, the easy money will already be made. If you found their breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.